Good morning, everybody, and welcome to What's Hot on the Open, where we take a look at all of the U.S. markets, see what's happening here at MarketStream.live. My name is Joseph Cusick from the Cusick Group Securities offered by MoneyBlock. I want to wish everybody a happy St. Patrick's Day. Also very fired up. Got a kid playing in the state championship down at the United Center here in Chicago for hockey. So this is going to be a good day for sure. But with that being said, taking a look at the markets, we're seeing that they're coming off of their best levels. As a matter of fact, you're starting to see the Dow Jones now challenge, trading on its lowest levels basically all morning at 20,939. You have the S&P 500 now in the red, just ever so slightly, trading at 2381.10. You have the NASDAQ now trading in the red, down 2 points at 5410, 5,409.90 now. And the Russell 2000 trading down about 30 cents at 1385.73. The Fed raised. They raised a quarter point. Now everyone's saying, and I have said this, that it sounded a little dovish. It felt dovish. The reason, and I wanted to give some context because people were calling me out on this, saying, you know what, as a matter of fact, why is that dovish, right? Here's the thing. They're still keeping rates really low. Thought maybe a half point could be on the horizon. They're still going to have two more hikes that are potentially out there, if not maybe three. The point being is that if things were so great, if the economy was growing so fast, if jobs were so plentiful and were so hard to fill, and people were making a ton of money, why are they leaving the rates as low as they are? In other words, they want to continue to spur on lending, spending, and so forth. And so that's why I have a little bit of trepidation. That's why for a lot of for myself and for my clients, we've basically been keeping a decent amount of cash, over 60% right now, sitting on the sidelines, waiting for a challenge of these areas that we're sitting at right now. As a matter of fact, looking at the Russell 2000, it did get over its 20-day moving average, but and that is notable, right? It means that the bulls are trying to grab grab the momentum to the upside. But I want to see this battle here. I want to see it and I want to see a challenge of that 1360 level. This is very tight. And how I'm going to manage that right now is that, in full disclosure, I did add a volatility exposure to my client accounts. And the reason why is that I think that volatility right now is at lows that, again, can we sustain these low vol moments? Sure. But with the vol trading at 1130 right now, and this is the spot or cash fix, you have the futures basically, I did it in the April expiration month, and the April VIX futures are basically trading around 13 and a quarter. The futures are actually trading a little bit higher than the cash right now. This would be the cash number. This VIX number, this volatility number is actually pulled from the SPX options, the first 2 months. So there's not a ton of fear that the market is going to move dramatically either up or down. To me, I'm looking at this in the landscape and saying, okay, now we truly need to see where the catalysts are. Not only is it just policies from the Trump administration here in the United States, but it's also going to be policies that are going to be coming out of Europe, right? You have the elections in France. You have the elections in Germany. You have Brexit. That's Article 50 could be triggered as early as the beginning of next week. You also have China. They raised short-term interest rates, which really soured some individuals and some, the markets in general. Yet they hit a 14-month high before the close in the Shanghai Composite, and then pulled off in the last hour. Looks to be some profit taking in that overnight action. You have the G20 meeting and the finance ministers in Germany as we speak, and you have Trump meeting Merkel this morning out on the East Coast. There are so many moving parts right now, but in the end, you need to see, are we seeing wage inflation? Are we seeing, do we completely start to understand what are our trade policies going to be? What is the tax reform components going to be? And is it going to be retroactive? The other thing is that with this quarter point, how does this impact financials? One other thing that was interesting is yesterday I actually saw a small merger between two regional banks. Now, normally people would say, well, who the heck cares about regional banks? Well, I do. And this is the battle I'm watching right here. This is the KRE. This is the regional banking ETF. And regional banks have basically been in an area where they've just been between 54 and 58 on this ETF, but they've been in a consolidation, right? One thing about regional banks is that they've been unable to merge due to some regulations that were put in place as far as too big to fail, right? What they didn't want to do is have a bunch of these mergers of semi-large regional banks, because then all of a sudden there could be issues, right? They start to get too big, and if any part of the region starts to come under pressure, that could put the balance sheet under pressure. So they put thresholds. You know, a $10 billion bank could merge with another $10 billion bank, or, you know, in other words, net, the total value of the bank couldn't be more than, of assets, couldn't be more than $50 billion. Well, quietly, those regulations were changed overnight, and the threshold now is $100 billion. That means that we could see some action in this area. I wanted to bring this up because this is a new regulatory play, and this is something that could catalyze. Now, KRE is down 59 cents at 56.36, but these regional banks are something that I've talked about where you can look at for some potential opportunities. We actually looked at it in Strategy Now and Tech Talk, so you can go back and look at the archives. But that's an interesting area, and as you start to see these regulations play out, this is where you can start setting up, whether it's bullish or bearish. That's something that you could determine by utilizing all these analysis skills, both charts and options. But this type of action is something that I want to pay attention, and you can actually start adding potentially things to your portfolio because of that. All right, folks, that is it for What's Hot on the Open. I will be back at 1:30 Eastern Time, and we'll be talking at Strategy Now. I'm going to bring up some pretty cool strategies this afternoon. And that's before St. Patrick's Day and the state championship comes up. So we'll get that done. All right, we'll see you then.